Okay, welcome to this joint Conservative Home with Atos event on digital banking and finance. I'm Paul Goodman, editor of Conservative Home, and I'm going to just let the panel speak one by one without attempting an all-encompassing introduction at the start. So, unusually, we have the Minister first, now a fully fledged Minister of State.
Despite your best predictions.
I think you mean attempts rather than predictions, do you not? John Glen, welcome.
Thank you very much. It's great to be here at another ConHome event, this conference, and I've been the Economic Secretary for nearly 4 years now, and what I've seen in that space of time in terms of the evolution in the banking landscape has been phenomenal. And what we're talking about today is what role the digital bank will have. I think I can offer something around what I see in terms of the regulatory context and what I see as the consumer challenges that come from that. Clearly, the high street is changing for a whole variety of reasons in terms of the way that the retail estate works with consumer behaviour. And that's had a massive impact and an accelerated impact on banking as people use this device a lot more for their banking, and therefore their reason to go to a high street bank has changed. And what I've seen in visits and conversations with the industry over the last 4 years is that actually people have a different set of needs from banking. But what I'm also acutely aware of, and I feel that as a constituency MP, that across any community, there's a wide range of population, a wide range of needs, and vulnerable consumers who need to maintain access to cash. And that's why the government have committed to legislate for access to cash. We're looking at what's happened in Sweden to make sure that the calibration of that mandate, if you like, and that undertaking is robust and secure. But what we've got to try and balance too is the fact that in many urban environments and in many places, people don't use cash. And I see it in London. I hardly ever use cash. And when I'm back in Salisbury in the villages of South Wiltshire, though one of my constituents has a business there and I always can use a card in her business, I need cash. And we need to make sure that there are reasonable distances between access to cash. But we're also seeing technology change as well, which is making it easier to obtain cash, and we've changed the rules that allow one now to obtain cash without a purchase. And obviously we had the proliferation of new entrants. You know, the next generation behind me will have a Monzo or even a Revolut card, Nick, which will actually mean that they will have a different relationship with their bank going forward. So in last year, 83% of adults used contactless payments. 72% of the adult population have used online banking, and 54% have used mobile banking. Those figures were very different just 5 years ago. So what I would urge in this conversation is that we actually take account of the pace of that change, because whilst we're helping support ways of maintaining access to cash, we've also got to embrace the challenge. And that also means being real about the challenge in rural areas in terms of connectivity and investment in the sort of infrastructure that will allow digital banks to function well. And of course, at the moment, there'll be plenty of colleagues in the House of Commons and many of you that will be able to point to, well, it's all very well moving over to digital quickly, but I can't get any connectivity. And these are the sort of gaps and challenges that we across Whitehall have got to deal with. So I'm very keen to hear what you've got to say and hear what others on the panel have got to say, because actually doing this well needs some pretty careful collaboration with industry. It's not something government should be mandating without dialogue, because the dynamics are changing so quickly. So I hope that sets the scene for some of the issues that we might explore during this session, and I'm obviously keen to hear your views and questions. Thanks, Paul.
Well, let's hear what Louise has got to say. Louise is the chair of the Open Banking and Payments Working Group, techUK.
Hello, and that is indeed one of my roles, and it's the role I use to lobby people like John and regulators to create much needed disruption in financial services. I also help incumbents cope with that disruption and startups to exploit it, all with the objective of actually delivering something that looks like good service to end users, that's consumers and organizations. So I've started fintechs, I've scaled them, I've sold them, and I've also seen it from the investor's point of view, both as on the exec of a fintech-focused VC and personally as an angel investor. And I think, I've got to say, I think the topic of discussion today has been phrased to be all about banks and digital banking, and in that technical definition, it's wrong. It's been a long time since being a bank was the be-all and end-all of financial services. It's not just about having a banking license to be able to deliver really valuable services to individuals and consumers. Banking remains important, but the value offered by innovators goes far, far beyond that traditional restrictive banking mindset. A mindset that, let us not forget, has failed many, many, many segments of society, from the and underbanked consumers all the way to the engine room of the economy, as we frequently call it, those small and medium-sized enterprises. So we've got to redraft the question from this narrow banking mindset to an expansive and inclusive financial services mindset, one where the market can deliver that innovation and competition, so those valuable services to each and every one of us and the organizations that we run. We are not starting from a position of financial inclusivity for poorer, older, or less connected individuals. It's simply wrong to think that we are. Our legacy banking services providers were and are failing many people and businesses. In 2018, the FCA, the Financial Conduct Authority, estimated that there were 1.3 million adults in the UK without access to a bank account, the unbanked. And many of these are poorer people without a fixed address or the prerequisite, 3 months of utility bills, our gold standard for identity, required to open an account. And according to the FCA, the UK ranks 32nd in the world for unbanked populations, a full 4% of people excluded. For comparison, Australia, Canada, Denmark, Finland, the Netherlands, their unbanked populations are 0. Every single person has access to a bank account. In 2017, a report by the House of Lords Select Committee on Financial Exclusion concluded that 600,000 over 65s faced exclusion from mainstream financial services, and this includes them rejecting the use of cash machines. If you're over 80, you're taking cash out of a machine, you're instantly more of a target to be robbed than at any other time. Interesting. But you don't have to be poorer or older or less connected to be or underbanked. You can be affluent, you can be young, you can be connected, you can be running your own damn business and still face exclusion from mainstream banking and financial services. So, another history lesson. Back in 2016, the Competition and Market Authority wrote an absolute potboiler. It's called the Retail Banking Market Investigation. It will send you to sleep. It concluded that our banking markets lacked competition, blocking many individuals and small to medium-sized businesses from the financial services that they require if they were to thrive. And people thriving is good. It's good for businesses, it's good for individuals, and it's good for us collectively as an economy. So considering all of this, it seems to me entirely unreasonable to suggest that the problem of financial exclusion is tied to the emergence of digital banking. As our discussion unfolds, I hope I get the chance to cover some of the initiatives that have arisen through digital finance that are correcting the exclusionary legacy of the banks. Digital finance is not the problem, it is the solution.
Thanks very much, Louise. Next is Sascha O'Sullivan. Welcome from CityAM.
Thank you, Paul, and it's great to be here. So, last night, at the perfectly reasonable hour of 1 o'clock in the morning, I jumped in a taxi to try and get back to my hotel, which is not walking distance from conference. And the taxi driver said to me, "Can I take you by a cash machine?" And I said, "Why? Don't you take card?" And he said, "No, I'm really sorry, I don't take card." And I said, "I'm sorry, I need to expense this taxi. To do so, I need to pay by card. I can't do it by cash." So I hopped in the next taxi. And I thought to myself, I felt a bit bad for him because that was a fare that he lost out on. But equally, as I was sitting here listening to Louise speak, I remembered when I, fresh off a plane from Australia, tried to open a bank account. And I basically had to beg some guy at a London branch of HSBC to just say, "Yes, I will hold your money for you." And I didn't have a lot of it at the time given, but it's different, all of these different levels of exclusions, all of these different, from the cash question that we're currently grappling with, that we've been talking about, and I suspect we'll continue to talk about, to how easy it now is to open a Monzo. It takes about 5 minutes on my phone, and all I need to do is take a selfie, something which I'm adept at. And I think when we talk about fintech and digital banking, it's important to go back to the roots of it. The rise of digital banking, of fintech, primarily comes out of a trust problem. After the financial crisis, the faith of the public in global finance faltered. The way things had always worked was no longer working. And people suddenly took a step back and thought, okay, how do we change this? And now we have digital banking opportunities which certainly feel like they're made for the user. They're made for you, for me. We feel more connected with it in a way because it's just easier to use. We don't have to go and jump through millions of hurdles on telebanking and try and remember the 6-digit passcode. It's just a lot easier. We can use our Face ID, and that comes with it its own set of problems, its own set of privacy issues, the questions around startups. Monzo currently has just withdrawn its application to get a banking license in the US, and I think that tension between, very, very high growth but loss-making companies is another thing that we need to talk about when we talk about digital banking. And as John rightly spoke about, the high street is something that is changing. And as a good CityAM journalist and a lover of London, I love the high street and I love shopping. But I'm not using it in the same way. I'm not going to the bank, and I never really liked going to the bank branch. It was always just something I had to do. And so all of this is an opportunity for innovation. Every single step of the way, there have always been problems with banking. They're just different ones now. And I think as we look at this, it's important to frame it not how is this changed, but just what needs to change now. So that's me.
Thanks. And finally, to our co-sponsor, Kulveer.
Thanks, Paul, and good morning, conference. Firstly, I just want to say it's great to be here. I'm really enjoying being back in front and talking to people and see people's faces. And thank you to the panel, thank you to the Minister for their time this morning, and for you, the audience. But as I was listening to Louise, to John, to Sascha, I was thinking you're making the business case for Atos. I need not say any more, but I will. And very proud and delighted that this morning we're launching our new digital vision for digital banking, of which a lot of what has been said is in here. And I might particularly point you to page 43, my particular opinion paper in there, which talks about a contactless society. I look after global strategy and communication for our financial services and insurance business. Atos is a large B2B technology business. We endeavor to provide the plumbing, the infrastructure, the data management, the cybersecurity for large organizations. In FS&I, we do that for big banks and big insurance companies, including National Savings and Insurance Bank, the government's bank. We've been doing that for a very long time, being a partner of theirs, helping to transform that institution, that organization, from what they'd admit was probably quite a dated approach to banking and even their processes and how they service things, to encouraging them to change the way they operate, to be more efficient, to provide new services, and to take their customers who, if you know the profile of FS&I, and I'm sure many of us have premium bonds, or parents who have premium bonds, or grandparents who have premium bonds, there's definitely a society that we need to help evolve and take forward as we move into this world of digital banking. But digital banking is about digital transformation of these organizations, and I hear Louise and Sascha talking about the challenger banks, the fintechs, the Monzos of the world, the Revolut and others. But those high street banks will still be major institutions, global institutions, that have huge amount of customers that they want to keep and take with them. And that's why, in fact, the cover of this paper, we thought long and hard about, speaks volumes about how the physical entity of a bank may disappear, but that banking brand, that banking transaction, those services are going to long live in the ether. And how do we encourage people to feel confident in doing that? One part of it is trust. And I think, Sascha, you mentioning before the crash and various other things, I was very fortunate to be involved in the launch of the Oyster card. I don't think people will remember when this was. I'll shock you by saying it was 2003 when we launched the Oyster card in London. But the major step change that enabled, apart from integrating various forms of transport, was e-money, as we called it back then. The first ever use of contactless transaction in Western society. The only other place in the world that it was really being used in anger at that point was in Hong Kong with the Octopus platform. That was the facilitator of moving people into a new era of where something wasn't physically being done and they had to trust a system, a transaction that they couldn't see and really feel comfortable about it. And I feel everything that's happened since then has been based on not just the ability to that to work well, but the confidence that Transport for London, the private organizations that helped deliver that service, made that 100% safe, secure, and confident. And I think that's where we stand when we talk about technology and money coming together. Because, let's be honest about it, money is important to us. And our confidence in the institutions we use is important. But what we're entering now is an era of huge change, rapid change. The need for the consumer, the customer, us, to be at the center of that change, us to feel part of that change. I hear what Louise says about exclusion and inclusion in digital. Personally, I talk about it from the perspective of a digital society. We are there. We are a digital society traveling at different paces, each one of us, and things are happening to us. As a provider of major technology services, Atos feels, I feel, we have a responsibility to talk about the change that's happening and make people feel more comfortable, to help them understand how they have a stake in that. And I think the final thing I'll say before we come to questions and comments would be, we as citizens are at the heart of this. We could feel that we're losing control, that it's being done to us, that there's so much noise I don't know where to begin. And I think if we as institutions are helping design, develop and deliver the services, working with banking partners, helping shape the way things will provide new services, new ideas, innovation, as long as we take the citizen, the consumer with us and enable them to have a voice in this conversation, I think we can echo and repeat the successes of things like Oyster and the adoption and the confidence that people have in those platforms. Thank you very much.
Kulveer, great. Thanks very much. Now we can have a bit of a discussion. I just thought I might open it in this way. John, I've done a number of events, and you have ministers who are new, and sometimes they're very good, but you can't expect them to necessarily know all that much about the brief and the background. You're a very experienced minister, and I thought you would cast some light on just a stat I picked up from what Louise said. She said, with the 32nd in the unbanked countries index, right? So that's a problem that in some ways is not related to digital. You've got people here who are unbanked who'd be unbanked anyway. So you'll have thought about this a lot. Why is this? Is this because we're a more unequal society in regional terms? Is this what levelling up is meant to address? How do you reach that group of people who are the unbanked, and some of whom presumably are older and not tech savvy or bank savvy at all?
Well, we have got the obligation of the 9 biggest banks have to provide a fee-free basic bank account, and we've got 7.2 million of those in the UK. So in terms of the supply, there are options for people. Some of the big banks like HSBC very recently are working with very vulnerable people, homeless people, using advocates to help them to get bank accounts sort of by proxy. But it will be about different societal norms, and also the fact that our banking structure has focused on, we've got 4 or 5 big banks, and in many other countries, like in the US, you've got like 5,000 banks, and there are much, and in Germany, there's a much stronger societal relationship with, at a regional level. So the bank is less of a more immediate and accessible phenomenon. So that is part of it. But I think that what we've got to think about is, what does digital offer in terms of leapfrog options, better options? And I think we can't always say that every person over a certain age it's impossible to use some of the digital options. And I think the functionality, the assistance, and that can be given to service people's needs, what I think it comes down, is there. What it comes down to is trust, and how a relationship can be formed, a trusting relationship can be formed with a consumer. But to the issue of the unbanked, I think that's quite a complex problem that's related to many other factors in society and around the way that different age groups have functioned without banks for a long time. But it's something that we look to address through some of the opportunities that digital can bring us.
Louise.
A couple of thoughts. John mentioned, 5,000 financial institutions, which are either credit unions or banks in the US. Actually, the largest opener of new bank accounts in the US was for a very long time, and I believe still is, Uber. Why? Because if you want to drive for Uber, the only way you're going to get access to the money is digitally. Right? So it's the business model that drove the adoption, that brought people in, that included them. So the ability to earn and the ability to get your hands on the money you just earned was absolutely tied in. And Uber realized that they had to provide that as part of their service. So point number 1, a leapfrog example for you. And secondly, another place where the US is far in advance of where we are in this country is finding digitally enabled solutions for older people. And I'm going to warn you that some of the stats I'm going to give you are pretty depressing here. We are told that older people are often cited as facing exclusion from digital banking or digital financial services. It's seen as an inevitability. Debates are held about how to ensure cash supplies at physical bank branches and the rest. But one of the things we're not really taking into account is that many of us, as we get older, are digital, people in their 50s and above will be bringing that digital experience with them. But we can bring those people who are older than us now into the sphere of digital, safe, secure digital services, using some of the examples from the American market. Now, I'm going to give you a couple of examples, one of which is called EverSafe. And they're offering bespoke financial services to seniors with inbuilt technologies to prevent fraud and financial exploitation. So you can look after your family member by bringing them into the EverSafe environment, or a carer can be a trusted carer, can be brought into that older person's financial affairs. There's also one called Golden, specifically targeting older Americans by addressing concerns again over fraud, but also retirement planning. There's one called TrueLink, which offers investment accounts and prepaid cards designed for seniors, also people with disabilities and people recovering from things like addiction, so more vulnerable people as well as older people. And why this is so important, because we are an ageing population, but we have not only an ageing population, but the diseases of an ageing population. And this is the depressing bit. We've got 850,000 people in this country with dementia at the moment. Another couple of 100,000 will get it this year. 1 in 6 over 80s have it now. And by 2040, 1.6 million people are projected to have dementia. We need to be creating those services that we can wrap around those people who are not only older, but also losing the faculties which are so important to their security and safety.
Kulveer.
I think, you know, the underlying point about safety within the banking structure is understood because we're seeing the amount of challenge in the banking design. So we as an organization look at a bank and say, where are your vulnerabilities? And I can tell you that the stat that we've seen is, we've seen the research that shows 300 banks are 300 times more at risk from financial attack, cyber attack, than any other type of institution. Now, there's one other event, by the way, in the world that has much more than that. That's the Olympic Games. We actually protect the Olympic Games. We're the official IT provider for the IOC, the Olympics and the Paralympics. So we understand the challenge that banks are facing. But the difference from, say, the games to the banks is the constant evolution that is now happening in the banking market. I think Louise touched on it, but the idea of open banking is really in the foothills of where it can go. And why personally I'm hugely excited about it, and I know why banks are so worried about it, is because if you could go into a buffet of banking services and decide how you wanted to curate your own type of bank, this is what open banking has the promise of. A little bit of that service, a model for a mortgage, something around helping older people and parents who may be unwell, and you can start to design the services that you want. That's the sort of where we can get to with this. But with that kind of fluidity and flexibility comes the potential for cyber attack and vulnerability. I think that is going to be the really interesting challenge, facing particularly not just the challenger banks or the digital native banks, but more of the traditional banks as they seek to open up their systems, their services to this type of innovation, but ensuring the safety and the protection is there. I think it's hugely exciting. It's, I know it can be depressing to think of the stats of where we are, Louise, but the opportunity is really there. What we do need is to have policymakers who understand this as well, and regulators. Obviously, we are a fully regulated organization, FCA compliant. We have to be in all the work that we do. But globally, we see vast differences in terms of what different regulators are asking for. And I think that will be the challenge, because if there's anything you come to understand if you take a close look at the banking sector, is that it's a global market. And although there are local services, it needs to align globally.
I'll just let Sascha, if you don't mind.
Yeah, sure.
So I think when we talk about equality and unbanked and ensuring that everyone has equal access to their own money, essentially, that's what we're talking about. Imagine being able to put your hand in your pocket and not find your wallet. It's a pretty horrible feeling. But there's a lot of people in the country for whom that is a reality. And I think there are two things here. There's the problems that we're facing now in terms of ensuring that older people can access what is increasingly a digital world and understand and navigate that divide. And some of that comes through innovations. As you know, there's been discussions about perhaps pooled bank branches on our high streets. So while you're not going to have NatWest on every single corner, there will be availability to go in and talk to someone if you need to. There are still ways to call someone on the phone. You might have to wait for a little while, but we're all very good at queuing after this year. But I think the second part of that, as Louise says, people in their 50s who do have that digital literacy, that's going to become less of a problem, I think. I think the older generations are becoming much more adept at doing that. But what is happening is the financial literacy of people across the country is also different. And I'm talking about young people here. And I'm talking about, what does it mean to have a credit card if you're 16? It sounds fantastic, right? But that's effectively what you can do these days. You don't need to sign up for a credit card, but you can use buy now, pay later schemes online without really knowing what that means or what kind of burden that you're taking on. So I think the equality question has to go, both fixing the problem of now, but also looking at where are the fault lines of the future? Because there will be deep ones.
Louise, you wanted to come back.
Yeah, I wanted to pick on something Kulveer said about the regulatory opportunity. Because I think there is a significant opportunity for us as a nation to set out our stall. So a little bit of history. In 2015, I sat on a Blackett review commissioned by George Osborne, which was how do we, in 5 years' time, 2020, the unimaginable future, retain our primacy in the fintech marketplace? How do we set the standard globally for fintech? And the answer that we came back with and that he adopted, he made happen, was a sandbox environment for digital innovators to have a good old play-in and to imagine the services of the future. And this would be set up within the Financial Conduct Authority, within the regulator. Now, this is great. One, because it said our regulators are interested in innovation and competition. They don't just have it as a part of their mandate or their charter. They're actually bloody interested in it. They want to see it happen. Good point number one. Innovators from around the world are attracted to bring their high-level skills to our country and to practice bringing their services to life in our environment. And two, the money follows because investors like to invest in things which are more likely to be successful. Being successfully graduating from a regulatory sandbox is a big old tick in the box for them. And it's also good for the regulator because they've effectively got a very practical crystal ball to tell them what products are coming down the runway and that they need to regulate appropriately for. So we have that safety and security as well as the innovation and the competition. So all that sounds absolutely fabulous. But in all of the cohorts that we've gone through the FCA's regulatory sandbox so far, it only adds up to 157 different services, right, tried out in the sandbox. So it's not very many. It needs to be scaled. And I'd also say it needs to be scaled across other regulators that are involved in this space to make sure that they've also got those advantages. So we need the ambition to do it. We need the conviction to do it. But we also need to move beyond open banking, because open banking is simply about giving us, you, me, access to the data we create through our individual purchases or through our businesses' purchases to be able to access services which are actually relevant to us, useful to us, valuable to us. We need to get to open finance. Now, at the moment, the FCA has bagsied the right to regulate it, but they're sitting back going, well, we need BEIS to do the primary legislation, and we need the Treasury to do the secondary regulation and has secondary legislation, and we're not going to do anything until those two things are done. We couldn't possibly. So we need to get, a wriggle on open finance, and beyond that, we can take it to open data, which then starts to disrupt those oligopolistic industries like telecoms and energy. One or two things going on there at the moment. But it starts to make us a hugely attractive nation for innovation and competition.
Right. Who wants to come? This gentleman is sitting in exactly the same seat you were in yesterday. No, you may not have moved. You may have been here overnight. And I'll take two at a time. I'll take the lady there and then... So, yeah.
Dominic Connor, Conservative Science and Technology Forum. I love the way that the Oyster stuff worked. I did actually show it to foreign people visiting London, especially French people. I said, I'm just going to go somewhere. I'm going to tap the skull and I'm just going to go there. What's it like buying a train ticket in Paris? Do you want to describe how horrible that is? The trust thing is the thing. My son spends a couple of mornings a month helping old people learn how to use these systems. And they are designed by morons. I have done usability, man and boy, since the 1980s. And I look at these systems, and they're designed for Sascha, or my son, who are broadly about the same age. They buy things. They buy that, they buy that, they buy that. That's good. I am like 59. I have no idea how many different sorts of... I would guess in any given month I have to deal with at least 50 different sorts of transactions. And older people have more complex needs. Teenagers, or obviously not a teenager, but people in their 20s buy stuff. I have insurances, I have mortgage payments, I have no idea how many things I have. And once you get past the simple transactions, which are the equivalent of taking a tube train, these things become an utter nightmare. And I am a C++ programmer. I am used to mindlessly insane complexity. And I look at these things, and I'd rather have the source code of these apps than try and use their user interfaces. Also, the fonts are too small. I can still see you, but I now need reading glasses. Even with reading glasses, I have problems with these things. They're not designed for older people with more complex issues. And just one final thing on the trust issue. My son actually trains people in cybersecurity now as a student. They have a gang and they take part in competitions. These old people come to these... what they call Silver Surfer things. He now has had about 500 old people. He's actually set up their passwords for a sustained period. He was in more control of their finances than they were. One of them, he bought a car for them. They sat him down, going and doing non-trivial transactions. And this is going on. I mean, he's obviously a very trustworthy chap, or at least so he tells me. But these systems do need, if they're going to take over the ecosystem, I mean, they're doing the low-hanging fruit, the equivalent of Oyster cards. I want to buy stuff. I want to tube train. But you try going to the more complex things, and they're just, I can't understand them. I'm not quite old yet, but I can't imagine the average 50-something being able to use those apps, even with help. And I think that is something they need. And they need to have people. Ultimately, my son's doing this as a volunteer. The fintech people are light on people. They don't have people. You sometimes get the impression that they are just AIs sucking our money in without any human beings at all, which is the future. But they will not help you. The old style bricks and mortar bank at least had someone you could say, why is this money going out of my account? How can I possibly stop it? And they do not have help. They really don't have help. And if you do run into a problem, it's not like, my tube train is delayed. No, you're into Kafka, which is a I actually had to explain my son Kafka so he could explain to other people what banking apps were like.
Right. The lady behind you from Starling, is that right? It's just because John knows everyone in the room, but the sound of it, right?
I know
so he knows.
Who've been following me around conference.
Indeed.
Nicest possible way.
Thanks, Paul. Alexandra Cardenas from Starling Bank. One point that I wanted to pick up on that Sascha made about challenger banks being loss-making businesses. Starling Bank actually became profitable in October 2020, but we are. So that's
the problem with speaking in generalization.
Indeed. And then, Louise, you mentioned the House of Lords report on financial exclusion, which also references SMEs. So I wonder if you have any further thoughts about what Starling and others can do in order to help the SMEs that are feeling financially excluded as well.
SMEs are a deep and abiding part of my soul, I think. Indeed, many years ago when I started a fintech company, it was because I couldn't get, as a long-established, highly profitable consultancy business, I could not get any kind of support from the bank that had known me from the age of 18. And had known me personally and through the bank, where I'd set up my business bank account, and it provided me no support whatsoever. And that's why I thought I'm going to have to just invent something that actually serves small businesses. And then the VC company that I worked with actually focused in this area because it's so so poor. The legacy banks, the services for SMEs are so incredibly poor. And I think if you look at the opportunities being unlocked by open banking, which many of them are actually fueling small to medium-sized enterprise-focused services, I think that's really important. One that I know very well is a company called Funding Options. And what they do is you as a small business shouldn't need to understand every single type of finance on the marketplace for you to work out what is the right finance for you. That should be the job of the financial services industry to work it out. What Funding Options does is it takes all of the service suppliers, so funding suppliers in the marketplace, and it has analysed all of their services. It analyses you through the power of open banking to understand what your needs really are as a business, and it matches you to the best provider of services. You then choose whether you want to uptake that service, and they can do it very, very quickly and very, very accurately. I think their fastest SME looking for finance to receiving that finance in their bank account was, I think, just under 20 minutes. But the important point is that it has to be the right finance for you, and you have to have control over that transaction all the way through. And so what I see with, as Kulveer has mentioned it, with open banking, but I'd like to go further to open finance and beyond that to open data, is that it's finally using our data to power hyper-personalized, predictive and preemptive service. What we have from the legacy banks is big, dumb products mass-marketed without consideration. They've had our data for years. They've just hidden it, hoarded it, never ever looked at it, never used it for our advantage. Now, we get access to our own data to power those services to our benefit as individuals, and also as to the starling question, to the value of businesses, small businesses and medium-sized businesses as well.
Just anything else to add on the first question, which I just summarised in my note as Hector says, everything's crap.
Beyond just buying stuff, yeah.
Anything on that, Louise? Do you feel you've covered that?
I mean, I would just observe. I mean, we've seen an explosion of fintechs in this country. Notwithstanding a report that was done 6 years ago, we did one this year, the Khalifa Review, which moved on from sandboxes to talk about scale boxes, the mechanism to actually take propositions and scale them up. Your point was about the interface with the consumer and how inadequate it was. And look, they won't be successful unless they adapt. And so your Revolut, who's represented in this room, who can come and defend himself in a moment, your Starlings, your Monzo, Oak North. And what Louise is saying is right in terms of what these new propositions have is a more sophisticated mechanism to evaluate creditworthiness quickly. And if the big banks don't adapt quickly, then they will I'm not sure they'll die, but they will certainly struggle to compete. The problem we've got is the calibration of the competition, because they've got such a dominant position. Though we've done a good job over the last 6 years of having new entrants into the market, what they all need is better regulation, better treatment of their capital, so that they can grow meaningfully to compete. But to your point, I mean, we've got propositions around InsurTech where people can better evaluate risk to offer a more customised and lower price for insurance, for example. I'm sure you'll get to know how to use these interfaces when you see the advantages as a mature and no doubt wonderful driver versus some of the behaviours of your son's generation, possibly. But what I think is important here is that I take the point about the need to have to address this security issue. But what we've got to accept is that security, anti-money laundering and all of those things do have to factor. One of the things that we will not do in this country is race to the bottom in terms of poor standards of regulation. But the mindset shift that we will enable through the legislation we'll put through next year is, does the regulator see the industry as something they've got to police because they're predisposed to behaviours that are bad, or do they see themselves as working with industry to enable competitive advantage in the global environment. That's the shift that I want to see in the regulatory mindset, and that's something that we want to legislate for as a government next year.
Just before I let the gentleman in the pink shirt in to defend his corner, Kulveer or Sascha, anything on?
Yes, particularly on the digital leap conversation with all the challenger banks. I won't name them all because they're all here. They're all talking. But we tend to work with the more established organisations because the digital natives, they're designing in a digital way from scratch. The traditional organisations, they're evolving. They're doing a phrase that's used very much, digital transformation. And they're having to redesign their whole organisation end to end. We call it total transformation. So they're looking at every element of their processes, all their old systems, how do they handle data, their policies around it. And it's a complete revolution for them. So it does take a bit more time. But the critical point is that you have the opportunity to actually do what you're asking for, which is go back to saying, what do your existing customers, not these new customers that are all going to adopt, because they're digital natives themselves and will be early adopters of those kinds of things, but traditional customers, the journey that they're going to take, we're going to take, to actually embrace this change. And one of the things we've done is we've invested heavily in what we call customer experience labs. We have those areas where we design these things to actually work the transformation, take people on that journey, because I personally keep saying it's a digital society that's evolving, but it's evolving at different paces. And that's where I think the traditional banks and organizations will always be there. There'll always be a market for them. It's about how quickly they go forward and take their customer base with them and embrace the change. Well, actually, let me come back. The point I actually will make to describe this, and the analogy, is when Oyster came out, the worry people had about if they didn't have money, how would they use the underground system? And at what point would Transport for London stop accepting cash on the system? And I think it took about 15 years before we actually got to a point where you could say we could go cashless on certain forms of transport. So it does take time to bring everybody on that journey. And I think that's a type of example of where banks are going. They're going to have to take their time to make sure they take everybody with it. But the customer design side of it, the customer experience side of it, is at the forefront of what traditional banks need to do because they've got traditional customers going on this journey.
I don't need to add much to John's stirring defence of the free market and competition because it makes a wonderful point. You know, these banks will only work if they work for us. And when I say us, I mean both me and you. And I don't want to make any assumptions, but I can assume there's a little bit of an age gap between us two. And I think what is also quite interesting, and Kulveer, you make the good point about the tube. This stuff, it doesn't happen overnight. But people are being left behind, and I do appreciate that. I understand it's probably harder for you to make sense of it than it is for me. I grew up with MSN Messenger and all of those weird things. But I think what's also very interesting is actually more institutional banks. So I think it was last week. Time has blurred into one for me. JP Morgan had launched their digital offering in the UK. And so, we're seeing this combination of institutional backing, and that's trust. That's a legacy that they've built over time. And so, I think it's interesting. It means that there's a place for the JP Morgan offering Chase, and there's a place for Revolut, there's a place for Starling and Monzo. It's just about what works for each of us. And that's, in the same way when you go shopping and you try something on, to go back to your point, not everything is going to fit me, is going to fit you. And so it's just about working out what that is.
So we will take you, and then this gentleman was the next one to catch my eye, and we'll carry on going. So we'll have the two. Yeah.
Thanks, Nick Taylor from Revolut. There's not much to disagree with. If we don't have a product that is good for people, we're not going to be able to succeed. We can't succeed on millennials alone. And on that point, our fastest growing customer base in the UK in the pandemic and lockdown was the 60 plus age group. So while historically it was very much millennials and cities, we've got millions of customers in those older demographics. The question I was going to ask is, does the panel see any parallels between the digital TV switchover campaign, which was coalition between industry themselves doing a lot, regulators and government as well. Similarities with that, with digital financial services.
And, yeah, sir.
Wouldn't you love that?
Hi, Gareth McNabb from Christians Against Poverty. I used to be at Nationwide, did a little bit of work near to Louise in open banking. The question around how we can ensure digital banking delivers for everyone is really interesting to me, because while Christians Against Poverty tends to serve the poorest and the most vulnerable, and the assumption would be they can't or won't use digital, our debt advice is a face-to-face model with some digital behind it to try and connect it. But the assumption's made that our client base are a write-off, and yet 80% of them have used online banking in the last 12 months. It's a device or it's data that they lack. Connecting the banks together, great. Startups coming in, great, big fan. But if there isn't data on one of these, then it's all for nothing for my client base. The UK is remarkably behind in zero rating practices by mobile data providers compared to other European countries and other international countries. And while the tech experts in the room can make their functions very, very data light, I just wonder whether there's a room to answer the question, ensure digital banking can deliver for people with no money by increasing the use of zero rating practices for what is essentially core infrastructure for our society. To pay to access your own money shouldn't be necessary. Boo to paid ATMs and all that kind of thing in terms of access to cash, but digitally we'll be doing the same to the 1.5 million unbanked, for example, if we insist on that. So I just wonder whether there's a room for government. It probably isn't the FCA because it's telecoms, but I wonder whether there's room for government to lean into zero rating practices that could help with debt advice too. Digital debt advice is clearly the way that we meet the quoted tsunami, and yet if the people who need it lack the data, then they won't be able to use those services. It might be a way to build trust in debt advice providers' profile online that are currently being scammed quite a lot. John, you heard a bit about that in yesterday's session. Apologies for the long question.
Yeah, I think that's a very reasonable thing to examine, because I think that that we see the poverty premium in a number of areas of products, and the Financial Inclusion Forum that I co-chair with the Minister for Pensions looks at these things, and one of the things that we've looked at is the application of fintechs and new providers to aggregate data to access so that poorer people can access more affordable credit options, as I think you're familiar with. But it's an evolving piece all the time. What we've got to do is make sure that we keep the regulations and the sort of enablement of those things at pace with the development of the technology. I suppose what I feel is that there are some great. We're going through a process of re-establishing how we get this access to cash sorted, and we've got a new framework banking agreement between the banks, involving the post office as well. We're also looking at because of course less cash being used, the infrastructure for the wholesale delivery of cash changes. And what we're trying to do is find an enduring solution that makes that viable, so that the basic infrastructure of cash generation continues for the foreseeable, but that we also recognise that there are some leapfrog opportunities. So I'm very happy to look at that, put that on the agenda of the Financial Inclusion Forum. But I think it's quite complicated to work out how you would configure that in the right way, but I'm happy to continue to talk to you about it.
Sascha.
To be honest, I'm not a tech expert, so a lot of the actual privacy concerns and these kinds of things, they go a little over my head, but what I can discuss and what I hear a lot is the fraud point. And is it easier to commit fraud when everything's online? Yes. Does that mean that digital banking is necessarily the reason for that? No. Everything is moving online, whether we like it or not. And, I think what I've said repeatedly over the course of this panel is it's not so much saying, okay, well, digital banking means that I'm more likely to lose my money, or I'm more likely to be excluded, or it's causing all these problems, so we need to go back to traditional good old banking, wandering into the high street branch. It's just about saying, how do we develop a regulatory approach? And this is a matter for John, as he rightly touched on, to deal with. It's about making sure that all of the people in this room who are obviously committed to talking about this put their ideas forward. The ability of private industry, private capital to come up with solutions is unparalleled. We've seen it over the course of the last year with the vaccine, and I think as long as we keep talking about the issue of fraud, as long as we keep talking about the issue of scam, then we will find a solution to it. It can easily, and I see this a lot in my work, get sent to the bottom of the pile because it affects old people. And it's not sexy. I'm a journalist. It doesn't make headlines, fraud. It should.
Louise.
A couple of thoughts on this. Fraud is really, really, really old, as a crime. It's one of the oldest crimes. It's always been with us. And as money moves online, fraud moves online. That's a statement of the obvious. But there is an enormous amount that we can, and I would argue should, be doing about fraud, over and above talking about it. And I'm going to illustrate this with a particularly nasty, a vicious little fraud called authorized push payment fraud. And this is where people and businesses are tricked into sending money to a fraudster posing as a genuine payee. They're the second largest type of payment fraud, following card fraud, both in the volume of scams and the value of the losses. I think it was 479 million in 2020. Cases were up 22%, losses were up 5%. And some of the cost of this fell onto the banks, and I'll come back to this, but 54% of it still fell on the victims of the fraud, the bank's customers. So the victims are funding the fraud that was perpetrated on them. That's one thing. But remember, the fraud, the fraud monies that were taken in fraud that is reimbursed to victims from the banks comes effectively from the rest of their customers. It's a tax on non-victims to fund victims, and it does nothing to stop the fraud. It just funds it. So, if we're actually serious about stopping fraud in this country, and I would say that was an incredibly important part of us being a very attractive economy to base your business in, then we need to invest in the technologies which are proven to disrupt the fraudsters' business models. Now, you will all have seen, I'm sure, when you're trying to set up a new payee, the confirmation of payee service that you have to go through. You have to know the exact name of the personal business you're trying to send the money to. You need to obviously have their sort code right. You need to obviously have their account number right. And what this means is we're starting to shut down that particular sending it to a fraudulent account. But as this stands, only the largest incumbent banks are mandated by the payment services regulator to implement the service. So guess what? The fraudsters are now targeting the smaller providers. And, making this voluntary is a real, problem, because of the 400 banks that were able to join confirmation of payee phase 1, 20 of them bothered, right? 20 out of about 400 bothered. Phase 2 is now open, and that opens up thousands of more financial institutions could join confirmation of payee. So, is there a future where we make joining systems like confirmation of payee, request to pay, actually conditional on being able to use, access, provide those financial services in this country? I think it's all part of making the UK the safest place in the world to do business. I think that should be part of our competitive advantage in asking businesses to come here not only to innovate, but also to base their businesses here. And it's part of this crafting a system that disrupts fraudsters' business models rather than implementing a tax both on victims and non-victims, which just guarantees the fraudsters' income.
Kulveer.
Yeah, I think underlying here, whether we're talking about actual money, but now money in its digital format, is it still comes back to the conversation around data. And I'm going to lean back on the oyster analogy, because when the card was launched, for the first time, an organisation, Transport for London, had lots of data about people using a system. And what was their response to that almost 2 decades ago? The response was, because there was privacy conversations and what would happen if people knew when I got on the tube and when I got off, was to lock this data away. We put a triple lock on it, buried it, and said, we'll never do anything to it. And that was the way of providing confidence to the public that they were safe in terms of their data would not be exposed to it. Fast forward a decade or so, and actually I was then working for Boris Johnson, who was Mayor of London, and we were being inundated from a transport perspective, I was the Mayor's transport advisor, from other businesses wanting to get access to TfL data for innovation, gaming, analysis, and even Transport for London themselves looking at this data and going, well, we could do some very interesting modelling with this, we can look at transport patterns, integrated data flows, all kinds of opportunity and innovation. But the policy had been to bury it, not use it as a protective kind of thing. So there was a real transformation required in terms of thinking around data, the accessibility of data, how do you create the size, the type of systems that could be safe and secure to have multiple partners coming in. Now that happened at around the beginning of the 2010, 2011, 2012. Where we've got to now, actually, is we're about to make another major leap. I'm sure everybody in this room has heard of the cloud. It's somewhere up there, and allegedly all our data's hidden on it. But cloud technology has evolved to an extensive point. We talk about how our data is held in an environment, whether that be public cloud or private cloud, and organizations looking to get efficiencies through cloud technology and where the data is hosted. We're going to move another step now, this is where the technology comes in that aligns with policy, to edge computing, and maybe some people in the room have heard about the edge. The edge is basically the conversation that says the devices we're using, whether that be phones or whether that be our vehicles or trains, are requiring so much data flow between 2 points that it's actually becoming inefficient. And we need to now host significant amounts of data at the edge. That's where actually it's all going to go. And we're going to go the other way, from having 80% of our data or 90% of our data in a cloud to having it hosted at the edge. It's much more efficient, it can be more effective, and you're not having vast amounts of information having to flow between 2 points. That also then requires a continuous thinking of redesign about both from a safety perspective, because if you're hosting all that data at the edge, how do you manage it? But also, what can you do with that data at the edge, because it becomes more accessible, more easier to design services around it. That's a point where, again, the conversation sort of sits between policy, technology, and service, and that paradigm of where edge computing will take us. It's exciting because it comes together, and you were mentioning the point, sorry, I didn't catch your name, but where we talk about where the data will be and the cost of the data and the usage of the data and the moving of the data, that's going to play a hugely significant part of how edge computing defines services and deliverability of those new services going forward. And by the way, that aligns with things like 5G, where our Wi-Fi capability is and everything else. But underlying to all of this, I would say it's about being sustainable. Because one of the biggest challenges we face, and we as a business are very passionate about this, is making sure that it's a decarbonized, digital-first approach to designing technology. If we are having to move vast amounts of data and information from A to B, we're using energy, we're having to create more of a carbon footprint, that is just not the way that we want to go going forward. So that there's a fundamental alignment in all these priorities. That means data, edge computing, decarbonized services come together.
Just want to come down from the cloud and back from the edge for a moment to the very physical, gritty business of the high street. I mean, John, you said at the beginning that you in the city, you don't need cash. But when you go back to your constituents, it's a different pace of life. You do. And there, the bank will be a central feature of the high street. If a bank closes in the middle of a city, you might not notice. If it closes in the high street, it has an effect on the other business in the high street, and we all know the problems high streets are having. So what's the relationship between the future of banking and the future of the high street? Yeah, I'll start with you.
Okay, well, the solution is to recognise that we've got a network of 11,500 post offices, which do 95% of business banking transactions and 99% of personal banking transactions. And so what we now have is a protocol where the last bank in a town ends. There's the banking standards mean that they've got to migrate those customers that are in that branch to use the post office service. And as I say, what we're doing is looking at the future evolution of that model so that that physical interface with someone who can provide you with banking services exists through the post office network. But what we've got to do is be realistic, because simultaneously we're getting an evolution in the digital offer and opportunities when people can go to the supermarket and get some cash from the till without having to go to a cash point. I also would think that we've got to look at how, and it was mentioned earlier, and I visited one in February last year just before the pandemic in, I think it was Yarm, where Barclays was the last bank in that particular town. And they basically worked to migrate everyone over to Barclays in that town, and they have a shared premises where they would, bring things together. And I think that if you look at some of the sort of devices and machinery and technologies that are available in combination in our banks, you can pay in checks through machines. You can do so much without that face-to-face contact. And then, of course, what you're seeing is specialised provision for mortgage advice at regional hubs through Zoom and Teams calls, which people of an increasing range of ages are able to access and are comfortable accessing. So in this fast-changing range of options, our job in government is to make sure that we've got that basic universal level of provision. That's what we're committed to with the legislation for access to cash, and also work constructively with providers, the high street banks, to make sure that we've got enough everywhere. But one final comment, just in terms of defence of the high street banks, because last year, everyone wanted loans. And of course, the first thing that happened is when the C-bills loans, the first iteration, didn't come out, we had everyone saying, well, classic, banks are letting us down, they're not lending money. Well, of course, why was that? It was because over post-crisis, we insisted that banks would have to do an evaluation of affordability. And of course, that was very difficult to evaluate in a time of, once-in-a-century stress. So then we brought in a 100% back product, bounce-back loans, and 47 billion got out of the door pretty quickly, much to the Chancellor's and my, alarm. Well, not really, but, clearly it was a significant amount of money. So, and then, of course, the criticism was, Paul, that, well, it's all very well, you've relied on those big banks, why aren't you relying on anything else? Starling did a great job of getting a lot of bounce-back loans and C-bills out. But, of course, they're set up in a different way, because their differentiation is to be able to look at somebody's digital footprint, their data, their records, and actually come to a quicker decision, as Louise was explaining, to lend money more swiftly. So that's what we're seeing, is we're seeing different actors playing different roles. But what we've got is an imperative for change, which is consumers' appetites and behaviours, which will accelerate this. I think the points made on data are well made. I think what's interesting is when we think about the cloud and the supporting infrastructure, how much of that becomes a critical infrastructure. And of course, the point on the payments review is well made. That closed at the end of last year, and we're eagerly awaiting for them to come forward with their proposals.
Louise?
Yeah, just a comment on high streets, which is high streets evolve. They really do. My high street's been around for many, many, many hundreds of years, and I'm very glad it's evolved, because otherwise I'd still be living next to slaughterhouses and brothels. I live in Whitechapel in the East End. So high streets change, right? And I had a quick look at the British Retail Consortium's report, which came out in August of this year, about the future of the British high street and consumer habits. And what they were calling out, and this is a little bit pandemic driven, but this is this was already happening, it just accelerated what was happening, which is that individuals are increasingly turning online for necessities such as groceries and, in their definition, financial services, but continuing to physically visit venues for entertainment and experience. And they defined it, their language was more around the luxury side of life. So the British Retail Consortium is calling this out very clearly. I then had a look at the government's Build Back Better High Streets report, and it's an absolute thriller, but not one mention of banks anywhere in it. And I think that then takes you back to the British Retail Consortium's view. The financial services is an online necessity, not an in-person luxury. And I think to draw all of that together again, if we're looking at financial services as an online necessity, then those businesses serving small and medium-sized enterprises, those high streets, shops that will make your high street distinctive, that will bring you there to have that personal experience, need the kind of credit decisioning that rapidly data-enabled service lenders can deliver.
I think we've now got to the COVID question, which is what has COVID done in terms of transforming and accelerating some of the transformation that we've been seeing happening in, say, the high street which has been, let's be honest, decimated through what's been going on, everyone's staying at home. But the banking sector was facing this for quite some time. And we've done a recent report about realizing change in this environment. And 2/3 of all banking leaders say, yes, it's about digital transformation of their services. What we try to get them to understand is the customer experience. You were talking about it earlier, Dominic, about where people are having that engagement with the bank, because it's digital first, but it's a service second experience. And that's where, whether it's an omni-channel approach where you have sort of the traditional bot that comes up that goes, how can I help you? And you think, well, am I talking to a person or is this something else? But at some point, you need to have the wraparound that will provide that full service, that personal interaction. And service desk provision, it's another part of a significant amount of the services that we provide to organizations. I don't think that will go away. But the question about the high street and the future of the high street is an experience question. It's about what is that experience that people will look for. And I think, Sascha, you mentioned about shopping and going out and looking at different things. Maybe some of us have done this now, where we may go to a retailer, see a product, even have a look at it, maybe try it on, go home, buy it online. We want an experience, we want to see something, we want to have that engagement, but we still trust and do the transaction at our own pace, in our own potential environment, feeling slightly more comfortable, and do it on an online basis, and maybe even get a more efficient price. I think there's the hybrid around how we might want to see the future of not just banking, but the high street and where it's going, but especially around the banking side. Because when it comes down to it, we do want that conversation, that trust, and the trust comes from a brand of saying, I recognize this brand, I understand what it stands for, I feel confident about it, and I can feel that I can engage with it, and then I want to do it on my terms and where I want to do it. So I think that the relationship will evolve. It's definitely something that's following in the footsteps of how retail is evolving, and retail is combining with banking, much as Uber is combining with banking in terms of how it can fund transactions. And I think we see convergence around that digital model, but the relationship of individuals with a brand via whether it's in a physical environment will be hybrid. It'll be a hybrid relationship.
Sascha, high streets.
Thank you. So I think Paul is right to focus on the fact that this is real. When we talk about digital banking, the cloud, the edge, end-to-end encryption, all of these things that can kind of feel slightly ethereal. But high streets, they're real. You walk up and down them. You know the people on them, hopefully. Certainly for me, during COVID, one of my only interactions was with the guy making my coffee in the morning. And I'd go back home and I'd work there all day, and then I'd see him again at the same time the next day. And that's something that can't be replaced online, as I think that we've talked about endlessly with the work from home debate, and I won't get into that. But I do think high streets are important. I love them. I love recognizing people. And I think that it's the importance of banks in towns, as John mentioned, is incredible. And I think what has to happen now, while there is the wraparound of digital banking and the in-person experience, I think when people are going into those branches, I think that experience has to be better than it has been historically. I think no one should have the experience that I had as an 18-year-old undergraduate just trying to get a hold of someone to open a bank account. I think it should be easy. I think there should be someone there to help you make sense of all of the different options. And John talked about COVID loans. I know of several commercial landlords who set up effectively, because the COVID loans, they were fantastic, but they were complicated. They weren't always easy to make sense of, to understand what help was on offer to different businesses. And the places that did that very well were the places who had someone to walk through small businesses and say, this is how you go about getting them. And we do need that for banking. And we need that for the future of banking. We also need digital banking. And we also need to be able to do it on our app, because I have a short attention span, and sometimes I forget to pay people back. So to be able to do that as I'm walking to the tube is incredibly accessible. But I also appreciate the discussion we had earlier. Not everyone's like that. And I think to answer the question of how can we ensure digital banking delivers for everyone, we need a bit of both. Both options have to be competitive.
Okay, we're probably now on our last. There was a hand somewhere. I'll take one and then go to the back. Yeah.
Hi, thank you. Harriet Beaumont, I'm here from Headland Consultancy. And just a question about, it's obviously now incredibly easy to transfer money or make a payment online. And we've already touched on the fraud question and the fact that confirmation of pay obviously adds another level of protection. But I was just wondering whether you feel that actually, you know, with the levels of fraud, it is now perhaps too easy to transfer money and make payments so quickly. And then perhaps there could be a bit more grit or a bit more regulation added back into that system to protect customers.
Yeah.
Thank you. Naomi Harris from WA Communications. I was really interested in the comments that were made around experience and the importance of having a positive experience when you go to the high street and when you're using online banking. And I was just wondering if the Minister could comment on how the lived experience can be factored into free access to cash. Because, of course, it's about simplicity, but also ensuring that people's lived experience in terms of accessing cash can be factored in.
Louise.
I'll go with the fraud, grit in the system question. Quite often we're told that actually what you've got to do is you've got to slow down the experience because that's the right way to put friction in the system so that we understand whether the payment we're going to make is fraudulent or not. My view is that actually what you need to know is whether or not you're sending the money to a fraudulent account or not. And if it is a fraudulent account, what on earth is the bank doing running that damn account? So there's quite a lot here around digital identity, which is around KYC and AML for setting up bank accounts in the first place. But then there's quite a lot around creating a network of being able to continue that process, not just at the account opening moment. So the way that a fraudster thinks about this is, I'm going to open a bank account, and then I'm going to do nothing dodgy in that account for the first 9 or 10 months. Nothing at all. I'm just going to go under the radar. That account will be set up. I'm in. I've got an account. And at that point, they try to create to perpetrate frauds. Actually, what we need is a network, and this is digital identity enabled, around knowing that if somebody using my photograph and your name, and I think I shared surname, is that a fraudulent attempt to set up a bank account? What about if it's with a different address? And what about if it's a bank over here? So you might try and set that up with, say, Starling, and then you try and set it up with Barclays, but you're using different variables the whole time. Actually, what we need is to be able to track that variability over time to be able to spot the behaviours which are fraudulent. And that comes with good digital identity management and good tracking of fraud and fraudsters over time, and then an actual action required, which is shut those bank accounts down. And also suspicious behaviours, like if a transaction comes in and hits the bank account, is then immediately atomised into 1,000 smaller payments to other bank accounts, then that bank account's dodgy, those other accounts are dodgy. So if you can see those if you can track that through smart use of digital identity, and you can also compel the shutting down of accounts which are clearly fraudulent, but then stop those fraudulent details being used to set up more bank accounts, we'd have a much more thorough system. So I don't think it's about slowing transactions down or putting grit in the system. I think it's about using technology well and consistently and ensuring that we can create for our nation a known position globally that we are a low fraud country, so that people want to come here to innovate, they want to come here to create their competitive solutions, but they also want to base their businesses here because it's the lowest fraud environment in the world, and that's the competitive opportunity I see available to John.
Sascha.
Well, I think I'll take the second question on the lived experience of people without cash, because I see it more and more often, and I think it's but also the amount of businesses who no longer take cash, and I do think that that's beginning to become quite a big problem for people who don't necessarily have the same access. I mean, it's not, even in London, what I'm seeing much more is homeless people just not getting anything and they're having to resort to other ways to get cash. And that's not a good thing for us. And I think that it's not, we have to be careful when we talk about it, because it can be easy to say, okay, let's say every business has to take cash. Let's make that a legal requirement. And that's not always going to be the answer. That's not going to work, especially for small businesses in most cases, because it's just cheaper not to take cash. But equally, I think it's that ability to ensure that everybody has access to what they needs to be taken into account. And these often are, as I say, the homeless, the elderly, some of the most vulnerable in our society, the disabled, who don't necessarily have the same ability. And I think those lived experiences and how hard it is in an increasingly digital world absolutely have to take front and center when we talk about this.
Kulveer.
It's a really good question about the fraud side of things, because what we've noticed and I won't name the organisations that we're doing that with, but some of the banks, is that actually the levels increase when new products and innovations are coming through very fast. I think that's one of the things we've got to manage as it goes through. Sometimes there are banking policy changes that are happening, and they can draw a level of fraud before the bank can normalise around what's happening. So I don't think it's about adding more. I think it's about assessing when you're bringing something in, just the full vulnerability that could be there. But also because actually, again, it comes back to that point, we've all mentioned it, about trust. If you're trusting the institution you're using and you're working with, you'll feel confident about what they're doing. By adding in more gateways, more interaction points, that can only frustrate and make you wonder, well, why am I having to do this if I trust this organisation? It's got my money and my details and everything. So there's got to be that right balance about ease and efficiency, trust, and also, I think, sustainability. I think a lot of things that people want right now is that whichever organisation they're using, whatever they're doing, there's an element of sustainable, I mean decarbonised environmentally focused service going on here, because I think that adds to an element of trust. It's why, actually, as an organisation, we've put it at the heart of everything we're doing. We have said categorically that our ambition is to deliver decarbonised, secure digital services. Now, great slogan, but what does that mean? For the last couple of years, we've been recognised in the global Dow Jones Sustainability Index as the #1 service provider for sustainable digital services. We're also #1 in Europe for cybersecurity, #2 in the world. So there's the first 2 points that we hope provides a credibility in what we're trying to do. And then you couple that with the digital services. And I think what we have to do, Paul, and what I'm trying to do here, is get that message out to people that you can do these things with partners, with organizations, because the technology infrastructure businesses will be huge partners for the services that the banking industry, the financial services industry, the pensions industry, the insurance industry, all these markets that we operate in, will be looking for these partners to help deliver these services for the future. And trust will be at the heart of it. And we as an organisation take that very seriously, and that's why we'll be focusing on it.
Louise, you want a quick postscript?
Yeah, very quick point about, Sascha raised some interesting points about homelessness. I live in Tower Hamlets, one of the most deprived boroughs in London, and one of the organisations that I have some contact with is called Mungo's. It looks after the people who are living on the street. And one of the things they said to me, which was really quite interesting, was that every single one of them has got a phone, right? That's the thing they've got. So I just want to flag what I thought was quite an interesting app. It's called Pocket. And it is for those people who've traditionally failed to access any kind of banking services. They might be due to that lack of a permanent address. So one of the issues of homelessness is that you don't have a permanent address. Poor credit status, well, I think you're that. If you're homeless, you've probably got a poor credit status. Might be an immigrant. And this is an app that launched in 2014, and it allows anyone with a phone to open a digital account that acts as a bank account. It allows you to build up your credit scores if you're capable of doing that, and it allows you to then start to avoid those really costly issues of like the pay-as-you-go premium pricing, which is really keeps people to be more have more financial problems, and it keeps them in that situation of having those financial problems, and it gives those people who are excluded from mainstream financial services a way back in. So again, even for those people that you would imagine subsist entirely on cash, there is a way to bring them into the reach of society and to do so safely and securely for them and for us.
John, the last word is yours.
Right, thank you. So to Harriet's question about putting the grit in the confirmation of P, well, obviously many of the big banks want that to happen because they're alarmed at the amount they have to pay, and that's what UK Finance lobbying me about. It'll be down to the PSR to make an evaluation, but I'm very sympathetic to Louise's instincts here. What it's about is about how can we have a more sophisticated evaluation of a more sophisticated fraudulent attempts to get into the banking system. And we see new entrants being more sophisticated in the way they deal with that, notwithstanding the fact that there are obviously heightened risks with massive growth around anti-money laundering. And of course, you see seasonally episodes when high street banks shut down accounts. To Sascha's unfortunate experience, that apparent sort of disconnect between the vulnerable individual consumer and the bank saying no. Well, they're doing that because they've picked up things that they think could lead to it. The question is, how sophisticated is their mechanism to evaluate fraudulent risk? And that's what we've got to deal with. And to Naomi's point about the lived experience, I mean, what we've got to do is evaluate the options for accessing cash, which are numerous and growing. But we've got to come up with a framework that creates a reasonable distance, notwithstanding the challenge across a rural environment as well. So we've got to land that, looking at what happened in Sweden, where they arguably went too far to start with, and then they got it about right. And that's what we're in the process of doing now, so that we can come up with a solution that's fair, maintains access to cash, within a reasonable distance everywhere, But what we've got to also accept is that these banks close, these high street banks close because people don't use them in aggregate. Now, we can't change that. Those are commercial decisions. We've got to work with that. Yes, make it easier for people to combine their entities, but you can't, in the end, change market behaviours which are accelerating in this domain.
Well, thank you, Louise, Kulveer and Sascha. And John, Louise picked up right at the beginning of this session the title, and she drew this big picture of digital banking, digital finance, open data, more competition and choice. And I suppose, Minister, we'll now find out, now that COVID is hopefully receiving, what the government's next steps are in delivering that future. So thank you all very much.